Welcome to the Swing Trading with Cycles channel. We're going to do our update today on crypto. Have crypto prices bottomed? And my last update was a while back, and I think it was on November 15th specifically. And I haven't made much of an update because not much has happened since then. We've really just been consolidating in a range. If you're new to this channel, definitely you want to follow on Twitter. I posted a few updates maybe a couple days ago, right before we started to sort of rocket launch, because we had been consolidating for 62 days at that point, and clearly the CPI data was going to decide which way we were going to break, and we've obviously broken higher. So the question on everybody's minds is, have prices bottomed for good? We're going to examine that question on this video. And specifically, we're going to start with a market cap comparison and also look at some usage data, just a way to ground oneself, because I think a lot of people just really have no idea how to kind of quote unquote value crypto. And so there's just some helpful resources. Then we'll look at a Bitcoin long-term chart. We'll also look at an ETH long-term chart. Those are the two that we're going to focus on here. Those are the two big boys, and we'll talk about why that is really briefly in the market cap review. So the site that we're using here is called Infinite Market Cap. So take a look for a pinned comment that should have all these resources for you, as well as some past videos about crypto to get yourself oriented, and just general info about the way this channel kind of evaluates assets. This website is interesting because it shows you all assets, including like gold, but then like companies. And so Bitcoin is number 18 with a market cap of just under 400 billion. And you can just see how that compares to like different companies, for instance. And ETH is number 63. So that is, a couple spots below McDonald's, for instance. So we're at ETH is at 187 billion. And McDonald's is at 190, almost 200 billion, for instance. And this is obviously after this massive drawdown where both assets are down something like 70%. So they used to be worth a lot more, right? And so that's just important to kind of ground yourself that, okay, that's obviously a huge number, 187 billion and Bitcoin at 400 billion, right? And if you want to take a look at just like crypto specific assets and market caps, you can look at something like CoinGecko.com. So this here is ranked by market cap top to bottom, and of course Bitcoin and Ether are the top ones. Notice the ones that have their price at $1 are called stable coins. They're meant to replicate the US dollar. So their market cap is really just a function of how many units exist, right? So in this case, Tether has 73 billion, 631 million, etc., like units of Tether, because each unit is worth $1. So they're usually counted in the total market cap for crypto, which is a little bit dubious. But again, these are just essentially US dollars, almost like they're in a bank, but not exactly. So you can just kind of get a sense of what these other assets are worth. Like Solana has rebounded massively since it bottomed at $8, and it's now up here at 8 billion. But keep in mind, this thing used to be worth so it's down over 90%. So it used to be worth like 90 billion at one point. So important to keep this kind of frame of reference as you're also looking at the charts, as you're looking at the trending data. And finally, cryptofees.info. And this site, once you go here, you can kind of go down a rabbit hole of like other data sources. But this shows you the fees people used the fees people paid to use different blockchains and blockchain applications. And that's I'm not going to go into a great deal of detail, but that's the thing that you want to understand is that Ethereum, I should say, is a network that applications can be built on top of, I should say. It's a smart contract blockchain, whereas Bitcoin is just meant to be just kind of money. And so these, like Uniswap is an example, is an application that actually lives on top of Ethereum. GMX is an application that lives on top of a layer 2 that lives on Ethereum, more or less. Optimism, same thing, is a layer 2 for Ethereum. Aave is an app on Ethereum. So these fees, so this is just the fees for the last day, and this is like a 7-day average. This just tells you that over the last 7 days on average, people paid about 3.5 billion in fees to use Ethereum. And that's various things like minting an NFT, buying an NFT, moving ETH from one address to another, etc. The idea is that these are people spending real money, and you can think about that sort of amortized over a year. It's obviously billions of dollars. And also, these fees from these apps that live on top of Ethereum are technically accruing value to ETH. And so that's the very broad, without going into a ton of detail, sort of bull case, especially for something like Ethereum. Bitcoin is different. It's meant to just be a store of value. It's a little bit inert. There are no applications on top of Bitcoin. And that's why when people talk about crypto, you should really separate smart contract blockchains from something like Bitcoin that's meant to just be kind of money. So those are just important resources to kind of get a grounding of what you're really looking at in the charts. And so I'll just really quickly, we'll look at these are just different cryptos. So you have Solana here on the left, Near, Avalanche, Optimism, which is at layer 2 on Ethereum we talked about. You've got Uniswap, Bitcoin, and this is Polkadot. So there are various ecosystems, but they're all doing the same thing essentially. They've kind of rallied, and we're going to look at Bitcoin and ETH in detail, but they've kind of rallied massively, right? I mean, look at this. Just an unsustainable up move. And now we're getting the pullbacks, right? You can see that upper wick, and upper wick is always a pullback on a lower time frame, as we talk about on this channel. And so we're seeing that pretty much across the board. Everything is kind of pulling back, right? And so it's telling you that this is a broad-based rally, that everything is being bought, and obviously right now everything is kind of cooling down. So if we look at Ethereum and Bitcoin just kind of side by side, we can look at the daily chart first. And I talked about, I'll just draw these lines so that it is clear, right? And we can go to dark mode, I guess, actually. So you can see this, we had this big move down on October 9th, and then we had this attempted rally, and this is ETH here on the left. And then ever since that, we've just been kind of consolidating inside this range. That said, we've been moving closer to the higher end of the range, right? And again, if I'll zoom in on this one, actually. The range is really the range of this big green candle. Because we had these two, I'll get rid of that line. We had these two big down candles. That was November 8th and November 9th. I think as this was an FTX situation, right? And then the next day, on October 10th, it tried to rebound. Actually made a slight higher high above here. I believe I probably talked about this, right? Because that last video was November 15th. But we ended up not being able to go anywhere. We actually drifted lower. We poked down towards the bottom end of the range, then moved higher, consolidated towards the higher end of the range, pulled back. But notice we didn't get down to the lows, right? That was your first kind of tell. Oh, but again, just consolidation inside a broad range. But this is a higher low, right? And then we go on to make yet another higher low here, and then kind of off to the races. So now as you think about exhaustion, it's helpful to think about how many days have we rallied, right? And as I said, take a look at the resources take a look at the resources in the pinned comment. But you want to understand the concept of a swing low and a swing high, because that's how the market moves. The market moves from swing low to swing high to swing low to swing high, just kind of on an endless loop, right? And so if you can measure how long the period between one swing low and a swing high lasts, that gives you a sense of, the longest rallies that we've had, right? And it gives you a sense of when a rally might be, getting a little bit old, if you will, right? Here's an example, right? Again, we're using the ETH chart. That's a rally that's your swing low, that's your swing high, right? That becomes a swing low once we cross above the high of that candle, right? Because this candle marks a low, right? We drifted down, right? Another way of saying that is a swing low is how an uptrend begins, right? And then, so we started an uptrend there, and you can see we had this little pullback here, but it was a higher low, not lower than this, right? Higher than this one. It was a low, but not lower than this one. It was a higher low. That's an important part of an uptrend. An uptrend needs higher lows along the way. And so this was another swing high, right? So technically this was a swing high, but notice it didn't make a lower low. And so you can kind of think about this as one small move, and really this is one big move. And if we think about percentage terms, that was a move from this swing low to this swing high of 25%. And then again, we did pull back, but notice we held right around where this low held. Again, that was a bit of a tell. And let's see, how much have we moved since, let's say, about this point here? So we've moved about 34%. We're now pulling back, obviously. And more importantly, how many days have these rallies lasted? So this little rally lasted 23 days, right? This little rally, and you also want to see kind of when do rallies get peter out, right? So actually the swing low is here. This little rally was 8 days and really feeble. So far, you can say that we've rallied 16 days, counting today, January 14th. And if we just kind of look at this period, right? That's another good gauge from this bottom to this, from that swing low. So that was 32 days, right? This from this little swing low to that swing high, 22 days, right? How about from here to there, 21 days. From here to there. And you'll notice in the bullish phase, we used to have these longer rallies. You see, that was 46 days, right? That was 46 days. That was shorter. But if you think about that as one big move with a pretty harsh correction in the middle, that was about 44 days. So if we're moving to a bullish phase, we could expect to rally for closer to 44 days, 35 days, 40, which makes sense. It means the rallies are getting stronger, not weaker, right? Because notice along this way, again, these rallies get shorter, right? This is a little 20-day rally. That is a little, 17-day rally. And so we're going to zoom it down to the lower time frames to see what levels need to hold on this pullback for this to remain a healthy uptrend and for us to think that, we have a bottom. And we'll also think about this long-term view as we're talking about having to make swing lows and swing highs. We want to think about that on the highest time frames as well. And so, one second here. Okay, so if we look at the Bitcoin chart, very similar story in terms of we consolidated for all this period, and then you can kind of notice we had this little period where we poked up here. We've now went above that, right? So we've made, so if I kind of draw the uptrend here, right? Like from here, a high, higher low. This is a bit of chop, more chop, but notice now we've made a higher high above this high here. So that's good. The problem is this is incredibly steep, and the same thing for the Ether chart. It's not an exception. The Ether chart is incredibly steep as well. So this thing is going to have to correct, and we're going to see what does that mean on the lower time frames. But before we do that, let's zoom out actually, and let's look at the annual chart, right? So I will get rid of these lines. So every candle here is an entire year of price action, right? And so this candle, the big red candle that you see here, is 2022, right? That's not surprising because we obviously had a red year. Same thing for Bitcoin, red year. What I want you to notice, and I've been pointing this out on Twitter, and I was pointing it out during the year as it was happening in real time. Bitcoin made a lower low below the previous year's low. That has never happened before. And it never made a low below the previous year's low and not recovered. For instance, this was a year where we made a lower low. So that was 2015. And we made a low below the low from 2014. But notice we closed green, right? So this, to be very clear, let me zoom in on this, right? This 2015 candle at one point was a red candle. We know that because of this lower wick, right? We know that price opened, right? We know that price opened at $321, but the low of that year was 152. So at one point, we had dropped 50% from where we opened. So it was looking ugly. And again, most importantly, we made a lower low below the previous year. When candles are making lower lows, that means we're in a downtrend. It's a bad sign. But we did not end the year that way. We rallied and actually closed the year at $430. So almost 30% higher than where we opened. And then the next year we made a higher high, right? So 2016 made a higher high than 2015. And then, of course, 2017 made a higher high than 2016. That's important. We've now made a lower low below the previous year. So again, to be clear, 2022's low was way below the low from 2021. That low in 2021 was $27,734. The reason that's such an important concept, I mean, it kind of makes sense intuitively when you think about it. That means that any purchase of Bitcoin that happened in 2021, you erased all those gains, right? By definition, the lowest price you could have bought Bitcoin in 2021 is $27,734, right? And so once you go below that level, all of those purchases are now underwater, and that's an important milestone. And we closed below that. We didn't recover that level. And so that level is still going to be pretty significant, 27,734. Like, you can kind of think about that. A lot of people are underwater below that number, right? I mean, assuming they didn't already sell and realize their loss or what have you. But and consider, obviously, if you bought Bitcoin in 2021, most people didn't buy the bottom, right? Most people didn't buy the lowest price of that year. They bought some other point, right? And that year, obviously, we went all the way up to 69,000. So some people bought the Pico top. Now for Ether, we didn't make that lower low, right? We made a low of $880, but the low from 2021 was $716. And that was a number that I was eyeballing all year as a sort of juicy level that could act as a magnet. But what happened? We got to 880 and we rebounded pretty hard. And that this number is looking pretty sticky as our potential low. And again, you can see in history, hasn't happened before where we made a lower low and closed. And so that continues. Doesn't mean it's not going to happen in the future. Probably will at some point. So these are your annual candles. And if we kind of work our way down from there, let's look at the quarterly candles, right? So each candle here is 1 quarter of price action. And here's a really exciting thing about Bitcoin. We are about to make a new high above. So this is the Q1 2023 candle. We're about to make a new high above the Q4 2022 candle. And notice the 2022 Q4 candle is making a lower low below the previous candle. So those are important milestones. The same way we just talked about it on the annual level. This is your quarterly chart, right? So the Q2 candle of 2022 makes a big lower low versus the previous candle. The following candle just consolidates, doesn't make a lower low, but also goes nowhere near making a higher high. And then we make a lower low finally. So it's possible that this becomes the low, the bottom for this cycle, right? The same way that was a major low. Obviously, that was a major low. That was a major low, right? And actually, it's really this low that was a major low, right? Because this low is actually a higher low than this, right? Like, these aren't arbitrary. This is math. This is your massive decline, your low, your rally. This is your massive decline, your low, your rally, right? Like, and so what we're thinking is this our massive decline, and this is our low, and now it's the rally part. And so we have to get above 21,473. So it really is that simple. And I've been posting this on Twitter for like maybe a week now. And again, that level is not some kind of secret magic level. It's the high from Q4 2022, right? I mean, specifically, it's the high from November 2022. It's when we made that low. That's how a swing low forms. That's how a bottom forms. Every bottom is a swing low. Not every swing low is a bottom, but every bottom is a swing low. And so that's what we're looking for here. A quarterly swing low above $21,473 for Bitcoin. And so we're about $1,000 away from that now. And for ETH, it's the same kind of situation, except it's a little bit more complicated for ETH because ETH actually made its low back in June. And so it's that Q2 candle that's the low. And so, like, if you want to be really kind of pedantic about it, ETH actually needs to get back above the high of this candle, technically speaking, right, for this to become a swing low. And that's not all the way up until 3,582. So that's like it would actually have to literally double, and then this would become, right. So just to be clear, because that's what this structure is setting up, right, that this became your low. The problem is this was such a massive decline. Like, look, you just have a huge red bearish candle for that year, And these 3 quarters have just been oh, this is the current quarter, but the last 2 quarters were just consolidations inside it. And so obviously, before you get to 3582, there are levels before that, right? And so the first big milestone is getting above the Q3 candle, right? And so that is a high of 1676. And I posted this on Twitter. It's also the high from November, so similar to Bitcoin. And then after that, the next important level is the high from that previous quarter. So that's right around 2000. It kind of hit a wall there. This was your lower high. I mean, another way to think about this, the way to think about this, look at this downtrend on the quarterly chart. Low, lower high. The problem is the anticipation was that we would make a lower low. Instead, we just consolidated. We didn't make a higher high or a lower low. We just consolidated. So now the assumption is we do something like that, right? Like these last few quarters were just price kind of catching up to itself, catching its breath after this big move down. And now we're kind of ready for the acceleration up. That's the idea. These 2 levels are going to be important. And it does suggest to you that above 2007, there may be some notion of kind of like clear air. Let's look at what that looks like on the monthly chart. You see, there are the levels on the monthly chart. So, right, you just basically have this chop zone on the monthly chart for ETH. And for Bitcoin, you can see for Bitcoin, getting above 21,473 is important. But then we'll really need to get above 25,585. And we're going to continue to see that. There are going to be these supply zones, right? Like you think about this downtrend on the monthly chart, low, lower high, lower low, lower high. People are trapped in here, right? So you're going to have interested sellers wanting to get out at these different levels. So there's always going to be another resistance ahead. Just know that. That's not going to go away, obviously. Which brings me to as we go to lower time frames, we're going to get a pullback. And so we're going to want to see the character of that pullback. We'll talk about what levels make sense for that. This is your weekly chart. This is your same kind of representation of all that which we just looked at, just on a lower time frame. Look at this big weekly candle, man. And this week candle closes in about another day. So Sunday afternoon. This is Saturday as we're recording this. And so it'll be important that we get follow through from the next weekly candle, right? Like that's the next big milestone. That next weekly candle needs to make a higher high. We really want to see it make a higher high. Now, it may be that we're kind of out of our breath here. Like we need to catch our breath that we made too much of a move. And we actually get a little bit of a consolidation from the next weekly candle. And then we get the move up. What I like to do on this for crypto is also look at the 4-day. Because the 4-day is actually kind of like a half-week candle. And you can see we've been making higher highs on the 4-day chart as well. So that's awesome. That's definitely good to see. So let's zoom down to the lower time frames. I guess we'll just do a dark mode here as well. So this is Bitcoin. So up here is the weekly chart in the upper left. Below that is the daily, and then you have the hourly and the 8-hour, and you have the 15-minute and the 5-minute. So let's look. So again, at the daily, this is just steep and uncorrected. But we also haven't been rallying for that many days, right? So like for Bitcoin, how long have we rallied, right? Really, the rally started there, right? From swing low to swing high. So you want to identify the first relevant swing low, right? So that's a swing low, right? And so that's about 15 days. But again, just crazy steep. What's the percentage increase from that? From the Pico bottom there to here? It's been about 29%. So a little bit, they're almost 30%. So a little bit less than Bitcoin. Let's look at the 8-hour chart first, right? So I like the 8-hour chart. So again, you can see this is like a mini version of the daily chart. So you have these little consolidations because each candle here is 8 hours, right? So you have like this 8-hour period where price doesn't do much and then explodes higher. 8 hours not doing much, explodes higher for 3 8-hour periods in a row. And again, that concept of inside candles and swing lows and swing highs, it's important on all time frames. Right now, this is an inside candle, right? Inside 8-hour candle. And this is an inside candle of an inside candle, right? So the previous 8-hour period, right? And look, let's see. So this 8-hour candle closes in 4 hours. The previous 8-hour period closed inside the period before that. I hope you're seeing that, right? And so we're going to need to break out above 21,162 to get the party going. and we need to stay above 20,244. So you can think of 20,244 as an important kind of line in the sand, because what you would want to see for this to remain as bullish as possible. Now we could break below it and it could still be fine, but in an ideal world, we need to consolidate, and that's fine. But you would want the consolidation to happen inside that range, right? You can almost think of it as like, I mean, what does that look like to you? That's right. It's a bull flag, right? So that's what you want to see. Once you start seeing it droop a little bit too lower, it tells you we might be in for a bigger pullback. And again, this is your 8-hour chart. Now let's look at how that is instantiated in the 1-hour chart. So that's it, right? That inside candle that we saw on the 8-hour chart is this little kind of sort of bull flag that's developing on the 1-hour chart. And, you know, you got an important level down here. That's that 20,244 level on the 8-hour chart. That's just the 1-hour chart representation of it. So we do have a little downtrend trying to form here. This is a slight lower high than this. But at the same time, right now, this is looking like it could, like you saw what we drew on that other one. It's kind of doing that, right? So we're getting the little bull flag on the 8-hour chart, on the 1-hour chart. And if we continue to consolidate, we may essentially get a bull flag on the 8-hour chart, which would be the bullish way to work off this big move, right? We've got to work off this big move, right? Like it can't just keep going up in a straight line like this. And right, like I think that kind of covers it if you kind of think about, and you look at the 5-minute chart. Again, not to belabor the point, this is the same move, but these are just 5-minute candles, so you're seeing more granularity. This was a pretty big plunge for like a 15-20 minute period, but it's recovered it almost, but not quite, right? Like we really like this level that we kind of were consolidating at, we're now kind of consolidating at a lower level right below it. So that's not awesome. So on the 5-minute chart, we really need to get back above 20,915, right, on a local level to recontend with that. And that's the way you can kind of work your way down the levels to kind of understand. So that's what, so I would say that 20,244 level becomes really important. And then you can see this on this chart, 19,749. Once we break below that, then you're at risk of kind of giving back this whole move and dropping to, let's say, 17,863. So those are the levels that you want to think about on the downside. But again, we need to capture that upside target and we need to hold it. We'll definitely can wash below it, but we would need to recover it. And let's look at the equivalent numbers for ETH really quickly, and then we'll close out this video. So for ETH, let's look at this 8-hour chart, right? So again, same story, right? Just different levels. It's an inside candle of an inside candle. For ETH, need to get above 15,664 and really need to stay above 1524 thereabouts in that neighborhood. And what's the hourly chart doing? So the hourly is a little bit more concerning. This is a very clear, well, let's see. It's definitely the beginnings of a pretty clear downtrend, right? Like we made this move here and then we did this. Like what is that? That's a lower high. Now we're at risk of doing this, that, right? That's what we want to be careful of. That's not a healthy bull flag. That's just a downtrend. You want to make sure you don't confuse the two. In this case, there was a move. The big move came from this one candle here. So this candle that happened at 7 o'clock on Friday, right? So 7 p.m. That's interesting. And that's the opening candle for the Friday candle. So we really need to stay above that level. So call it 1445, right? So that's almost $100 down from here. That gives this thing like a lot of room to sort of play with a little bit. So that's the level that I'm kind of watching here. But again, I mean, I was going to say we're going to get a pullback. The pullback has already started. It's just that it's on the lower time frames now, and you want to be careful. Like what you want to really be careful of is making lower lows on the daily chart, and obviously this applies for Bitcoin as well. If we did something like that, and then maybe even got follow through, that's what you want to be really careful of. So your real line in the sand is the daily low. So for ETH, that's 1450, and let's just look at what that equivalent level is for Bitcoin. For Bitcoin, that is 19,895, right? Now, we could wash below that level and then recover it. It becomes a false breakdown. Be aware of that. But that's your warning sign. Like, notice, we're making higher highs, higher highs, higher highs. That's what you want to keep doing. Higher highs and higher lows. That's what's happening here, right? Each candle makes a higher high than the previous one and also holds a higher low. And we want that pattern to continue. We can have inside candles where it doesn't make a higher high or a higher low. That's good. That's healthy. That's price consolidating. But we want to watch for those lower lows. So we'll leave it at that. This is definitely promising. Price is stopping exactly where you thought it might. Like, look at that. We're stopping right around here. Like, price was up here and it's already pulled back. And so this is kind of your moment of truth over the next few days. Know the levels versus getting overly emotional about this being a bottom or this being another bear market rally. Let's just collect more data. So we'll leave it at that. Thank you guys for watching.